S&P Midcap 400 index. Why is this index important to the exchanges? And why is it important to people that buy and hold for those people and these kinds of stocks that are in this index? We had a very big rally on Friday on the jobs report, and everything is green. And I'm going to cover the weekly chart and the daily chart and be very specific. However, individual stocks in the S&P trade. When you look at S&P 500, you look at Midcap 400. There are some stocks that are in here that are leaders, like in the S&P, that within 1 day, 3 day, 5 day ranges. Here, one of the things that will highlight during the earnings season and the quarterly earnings season is what are the leaders? What are the leaders in this index called Midcap? Midcap is very important. Why? It's a very good gauge of the economy in the U.S. And Midcap, well, their profit structures, this EQIX is our leader. I want you to know that right now. That's the leader that we trade in this index. EQIX is the one. They just reported earnings and they did extremely well. They made a great move up off of that bottom, right up to that top side. And it's these stocks like that. And there are some others in here. There's some retailers in here as well. And there are stocks like GPRO the other day. I don't know what the heck was going on with it, but we're going to, we're doing an investigation anyway. So there are some mid-cap 400s, but that is the number one that we trade. There are others that we'll disclose later. I will go into because it's all of these stocks in here, how they trade is what equals this weekly index, and I'm going to let you know how the public views it. And here's how they view it. Since we had this correction in the mid-cap, and we were short mid-cap down to the bottom, we were. Because the leadership of the S&P 400 index, the leadership stocks would be the higher beta reversal ranges and price directional movement that would provide us the best yield on our entries and our exits using this S&P Midcap 400. The leadership in daily price range movement. Now, the combined index is all 400 of them in here, but I'm going to point out the 50-week moving average, and the 100-week is this line right here, and the blue one is the 10-week as it is, and that red one, oh my goodness, that's a 20-week moving average. And what is wrong with that? What is wrong with that? The value of the 20-week moving average within this 1 week, 2 week, 3 week, 4 week, 5 week, counting this last week, and today's date is 8/4/2012, 9:08. Now, the analysis here is that 20-week moving average is descending in value. Yes, you got your bottom-up trades here within the weekly consolidation of this index. However, it's going to be weak at the upper end of resistance because of that 20-week moving average decline. From a standard technical analysis public view, not stockmarketfunding.com's view. Within the consolidation of the weekly movements, one thing that we do know is how to use the SMF high frequency platform. So that when you're dissecting the public analysis here, is that I'm telling you that within the weekly movement, that the upper end of resistance in the Midcap 400 will have a very strong wall of resistance. And you will know that this price right about there is where that upper end would be. So therefore, this bottom end that they've got ascending off of here, off of these, this is where that bottom up trade. So you're buying the bottom here, but you're selling short up here now. okay? But when it comes down to the bottom and you're still holding this area, it's right along here. It's right here, right across here. So when you're holding those areas right across here, that means that this low is higher than that low, but the upper end of resistance is most definitely there. Okay, now that's a weekly level. Now, when you look at this on a daily level from a standard public view, and that's what most people look at markets today. Okay, they don't understand how the dollar prices and these things happen, but you can see this lower ascending channel, which is bullish, not bearish, because each time it hits the bottoms, it goes up, and it's a great place to be long during these, and it comes down, but when it hits these support levels, it bounces up, makes that higher high, pulls right back into the base here, and then comes right up to this resistance level. Now, what this is basically all coming from is this 2000 lows over here. Let me show you on a daily level. And that's basically this week right here that we would like to point out. 10/4/2011, October. Okay. And you had another stimulus round going into the new year, and you know that was the bottom of the doom and the gloom areas of the Midcap 400. When the Midcap 400 fell in that weekly chart that I showed you all the way down to those support levels, this is what this daily base looks like. These lines up here are just price channels that go through the whole thing on this reversal channel. Okay. And there were your bounces, but you can't get above it. So if I draw a trend line right here on this daily chart, which I'll be happy to do, we're going to go to this area here. That's going, the horizontal line right here is going to benchmark MMT, this major support level that when we were getting the top of the 2012 short in the mid cap, and we're updating it now, and you'll find this under on our new website so that you can keep up. Go to the Stock Indices Video Archive, because there you'll find your new postings, okay, on various different things with various different other things, like you got the Dow in here, NASDAQ 100, that's, you know, the NASDAQ comp, NASDAQ 100 stocks, high volatility, you got your S&P, you got your Morgan Stanley commodity in there. We'll keep you updated as to what we're doing, but we usually make the markets where the money is in the higher trading ranges, but we do let you know about the night capital thing. So when we're interpreting the public standard technical analysis model versus the SMF high frequency models, okay, and we're market maker, so we make markets within the broader price structures with the public. Okay, and we view what we do a little bit different in our orders and entries and exits, because we understand everything that's needed to beat these people at their game. So we're looking for a breakout here across these tops. If you break out, well, you would want the mid cap to be a leader within the broader indexes and indexer, you know, everything. You want that mid cap burning, okay, that 400, because if this is making higher highs, then that gives that much more bull support to the broader market, this mid cap 400, okay. And we're going to cover the small cap. However, we are in an ascending base at that resistance level. There is another support of resistance. This trend line, this horizontal one, is where the consolidation within the range was happening when we were shorting some of these stocks up here in this mid cap. We have it on YouTube channel. You can look under here. You'll find it. So basically, I'm updating that. And I want people to understand that it's 8/4/2012. And it's Saturday, and it's 9:14 a.m. And we're in August, the dog days. So the reason why we're getting everything in the system now is we want to know where we were going into the election, going into worldwide banking. Every worldwide banker is going to probably, you know, flood the system with printed money. Who knows? And Ben Bernanke's around the corner. Listen, If they want to continue to leverage up, it's going to be this particular one, and we're going to relate this 400 to the small cap. So that's your daily analysis. Once again, this weekly analysis during this period from its original weekly tops where we were short the index and the leaders here would go down in the 2012 highs. You can clearly see right here where that came up. But you see, why is the mid cap really important? Because if I show you other indexes, it's going to look just like this too, or a little bit lower. But they have to be building off of the lows to help the broader bull market, if there is going to be one. This is a counter trend to the short. This was the rally, that was the correction, and this is a new accumulation on the weekly level. Let's conclude.